to the Trading Market Technicals morning call video for Thursday, November 29th. A lot of choppy price action yesterday. First thing in the morning, we were down about 3.5 handles in the pre-market session. We did get a gap down low and a little bit of follow-through on the housing numbers that came out early on around 10 o'clock. They were dismal numbers, to be quite frank, and sure enough, the market responded on that, sold off, and as traders, we looked to stick with the trend, and if you were short, you probably made money. Obama comes out around 11:30 and states that he'd like to get the fiscal cliff issue resolved by Christmas, and that's all the market needed to reverse course. And pretty much, if you were short and looking to re-enter short on that pop, you probably got stopped out as well. So, very difficult day in the markets yesterday, especially a lot of whipsaw price action. And once the market clearly reverses in the afternoon, in the early afternoon, around 11:30, 12 o'clock, it's very difficult for the charts to reset. So sometimes it takes a little bit longer than others, as far as trade setups are concerned. So what do we have? Well, as of right now, showing you a NYMO, and I'm going to go over the 10-minute chart in a minute, but I want to show you the McClellan oscillator here. As of right now, we're at plus 41. Now, here's my thought process. Now, we're looking at, I've been calling last week for a pullback. Now, could this be the shallow pullback that we are looking for? It's very possible. I'm looking for a little bit more of a deeper correction, but, nothing has to be. This is what I'm looking at here in the charts, and this is what the charts are telling me. So, as of right now, we closed outside the band. We did get that little bit of that sell signal in the market. Now it looks like we're back in the band again, so we could run higher, anywhere into that 80, 90, even 100 to be overbought. So, the markets right now are sitting at around 14, 15, 14, 12. The next target would be 1425, 1424 to 1430ish, and then I think that the markets would then probably look to pull back. And this is why I'm saying this, only because of the resistance area. And here's another chart, and I showed this to you. This is the Nasdaq record high percentage index, and as you can see, we did have that record low spike down here at the 5. And if you look at all the other times, we always got that retest, right? That higher low. And I point this out a few days ago, but I wanted to show this to you again. Higher low, higher low, higher low, higher low, and then again, it doesn't have to, right? It does not have to, but if you're looking at repetitive patterns, this is what happens. So could this roll back down again? So my assumption would be rally into the 1424, 1430, get everybody excited, and probably something comes out and has one more dip to make this a higher low somewhere in here possibly, and again we rally into the holidays and going into the second week of January. Again, just an assumption. Now this is looking at patterns. This is what possibly can happen, and how you trade it is you're sticking with the trend. If we open higher this morning and we're breaking out of our range, our opening range, then you need to looking to buy dips, and you need to look to buy strong stocks that have been beaten down, but have relative strength to when the market was selling off. So that's something what you want to look for. I don't like shorting strength unless it's capitulatory. So that's something that we're going to be looking at. And I'll get into the charts in a minute, but I wanted to show you a couple of things. Here's the dollar. Now, the dollar didn't sell off yesterday. Dollar down only a couple of pennies. We're still holding this heavy resistance area. So this could really be the key here for our next pullback, if you will. I would not be looking to short the market as of yesterday's reversal. So to me, I think we'll get some follow-through to the upside, and I would not be looking to short. Now, if you're looking to short, I'd be looking to short into resistance, heavy resistance on the daily chart, and that will be nibbling short. But other than that, I'd like to stick to the trend. So here we are. We're in this area here, and this is something that we're going to be paying close attention to, this 80 area. A break below and close, then I think you're going to have probably a big push to the upside in equities and commodities. All right, take a look at the Shanghai. I mentioned new lows again. Not good. Pretty ugly here. And this is the end of day, so this was yesterday's price action. But you can see how really bad this looks, and not giving any help right now. The U.S. markets are totally ignoring what's going on in China, and again, that could happen. All right, so now let's go into our charts, and just to show you here our 10-minute chart, sideways consolidation from Friday, Monday, Tuesday, Wednesday to dip lower. We consolidated, we dipped lower. Now, again, if Obama did not speak, we're probably looking at somewhere 137, probably in the spiders 136.5. However, since he reversed the markets like he usually does, and he comes out to talk the markets back up, and that's how he has done so in the last 4 years, we actually clearly closed up higher, and we're at the end of this range. Now, we are up about 6 handles in the S&P in the mini, so that's going to put us above this range and probably move a little bit higher. Now, that's a 10-minute chart just to show you what's happening. Now, constructive here. We have our indicators, our daily indicators are pointing higher, making higher highs, higher lows in the histograms. We are pointing higher in the stochastics. We are not overbought, so there's plenty of room to the upside. And as you can see here, the S&P 500, the cash, we held that 61.8% retracement, and now we're back into this 20 above the 20-day moving average. And now we have consolidated for 4 days, right? So we had that big push up on Friday, Monday, Tuesday. That's why I said we're still consolidating, still bullish. And then we dipped lower, and then we came back up again. So this bottoming tail here is also very bullish. And now we are in this area here of 1410, right? 1424 to 1430 is going to be a big area of resistance. And that's where that market's going to need to, where the market's going to probably come into a little bit of pressure. Now, because don't forget, we've rallied very, very hard. We've only had a 2-day pullback. If that, and then now we're starting to rally again. So this to me, the markets are always better taking a break, and I would like to see this market actually come back and retest that 200 or anywhere into that 1380, 1375 area, make that higher low, and then rally. I'd be a little bit more aggressive to the long side. If this market does go and continues to go higher, it's just going to have to go without me. To me, I think the amount of risk-reward is just not there. Not that I'm not going to nibble long and take a few overnight positions, but it's just, to me, it's the risk-reward isn't there. Rallying for this many days up without any type of pullback. We literally had a 2-day consolidation and the dip and then the buyback. So that's something that we're going to monitor. Still very early. We're still at the end of November, so we start all of December. So I think that we rally up in here, and then we get that pullback maybe back to here again. And then we rally into the new year, probably testing the highs. When we get to the highs, it's going to be another story. That's something that we'll save for another video. Our basic ATR chart with our S&P, very simple. As you can see here, we didn't quite get up there, but we're close enough into this band, as you can see here. And we're starting to roll now, and markets are starting to clearly move up. So this will probably pull back in a little bit, and then we get up. But now, when we get to this bottom area here, we want to be aware and alert that we're coming into resistance, and the ATR now is at its lows. S&P spiders, same thing, but I want to show you the volume. See, now this is something that is confirmation, and a lot of people, they tell me, oh, the volume is not there anymore. That's not true. Whether it might be less than it was, that is true, I can tell you that. I still like to look at volume for confirmation. So as of right now, here's your average volume on your spiders. And whether it be lower or higher than usual, you just take the average. And this is very constructive here on the bull side, on the bullish side, excuse me. We're below the 50, so it's going to need a little bit of work here. And to me, again, a big move like this needs a little bit of rest. So we'll probably test that 143 and probably get back into the bottom, get back in this uptrend line here. So if we do get back in here, so we could literally run out and test the highs here. So, but again, very bullish here. So I would not be looking to short. If you are short, as a hedge, that's one thing, that's fine. But I wouldn't put any new shorts out. Okay, so I mentioned about the 30-minute spider chart that had an inverted head and shoulders, left shoulder, head, right shoulder, and we broke out of it. And I always said that we always usually test the neckline. We pull back to test the neckline, and guess what happened? We broke past it by a matter of 30, 40 cents, tested it, and bounced off it. So to me, this validates the inverted head and shoulders. So our next upside target will be 145.25 as far as technical analysis goes, okay? So bullish configuration, bullish setup, 145.25 will be the target, and that's going to be the upside target. Now, that could be 14.25, 14.30 in the S&P. So kind of puts everything in perspective. IWM's risk on, no question about it. As you can see here, big move back up. We dipped below the 20, and then we actually closed back up in here. So if anything, the Russell needs a breather, a big breather. 2 gap up days, big gap up here, another gap up, and then a basic just a Dragonfly Doji here. So this area here, we had that reversal candle, was not confirmed because we closed back up to the end of the range. So again, market's still in the bullish configuration. We do need a little bit of a break, but we're going to gap up again. Let's see where the market closes today. Dow Jones Industrial still below the 200, but again, our indicators are pointing higher. We did get a little bit of a bigger volume that we usually did. As you can see here, very small, but we did get a little bit of more volume than the previous couple days. Below the 200 needs to get back up above it. But as you can see, our Bollinger Bands are starting to pinch here. So on the daily charts, I like to look at that and see if the Bollinger Bands are pinching, that means that a bigger move is on its way. Doesn't tell you the direction, but it does tell you that bigger move is on its way. All right, XLF, which is the banking financial sector, again, held that nice little area here, right to a penny. And this area here was a good indication that if it didn't hold here, which it did, we literally, as you look at our volume profiles, we'd actually come down and probably retest the 200-day moving average. But it held nicely, and we're back up above the 20-day moving average, recaptured the 20-day. And as you can see here, nice volume that confirms yesterday's move higher. Apple. Let's talk about Apple. I noticed that a lot of the big conglomerates are putting out special dividends early before the end of the year because of the new tax laws. So Costco came out with it, Walmart came out with it, and my guess is that if at all anything, I think that Apple will probably come out and issue some sort of a dividend, an early special dividend. And if that happens, guys, now this is something that I want to show you. If that happens, that's probably going to catapult this the stock probably up to 620. That 622 area, like I'm mentioning, is going to be resistance, probably 620, maybe even 630. And that's going to be that right shoulder. That's going to be what it needs to really produce that right shoulder. And then we would need to reevaluate it. But I have a funny feeling, and again, this is just an assumption. Please don't trade by it. I do think that maybe it's possible that Apple will come out and initiate a special dividend. And that would rip the markets as well. So please keep that in mind. I would really want you to look out for that. Apple Daily, we've been pretty good calling it. I think right now it's okay. Me personally, I would really, if you're gonna initiate a long here, we're below the 200. I really wouldn't think so unless you're gonna just small for a trade. But it does look constructive. Looks like it's a bull flag into the 20-day moving average. We're still above our 38% retracement here, right off of the top. So maybe we recapture that. If we could get back below 600, then I think we'll take a beeline to the 620 area right here, that 618, 620 area, 630. That 620, 630 is going to be that pretty decent sized resistance if you look on this side here. So if you're looking for a trade, then then I think small entry, your stops would have to be way below. So you need to really adjust your risk based on your risk tolerance. So, but looking okay, as long as the market doesn't break below really yesterday's low of 570, 572. Let's call it 570. And that'll take us to the Qs. And Qs exactly the same thing. Trying to recapture the 20-day constructive higher low. So again, quick recap. Yesterday's move higher on that reversal on the Obama speech with the fiscal cliff confirmed via volume. So looks like we might be headed higher again. Let's see what happens today and tomorrow. One last chart I want to show you is the SMH. I said 'tis the season because SMH seasonal, coming into seasonal strength. So any pullbacks here, look for your favorite tech sector stock, and I'd be looking to purchase it. All right? Have a great day, everybody, and we'll talk to you tomorrow.